Solid set of numbers for the first quarter. The numbers were above estimates on almost all the parameters. Revenues was up about 54%. The T&D segment for the company has been firing away. Praveer Sinha, the MD and CEO at Tata Power, is now joining in. Mr. Sinha, good morning. Thanks for joining in. So solid performance on the revenue front, profit as well as margin. Let's start by getting us the whole year take. In terms of the generation business, what growth do you envisage given the strong start in the first quarter?
Good morning. Thank you for having me on the show. I think this has been a consistent performance of Tata Power. This is the 7th consecutive quarter where we have shown improvement in all the parameters. And I think we are on very solid footing, a very solid foundation. And I do expect that this momentum will continue in the next quarters also. We have done a lot of things, starting from our cleaning of our balance sheet, the deleveraging that we have done, and that has helped us to save the interest cost. In our performance, we've gone for cluster business. Our thermal generation continues to do exceedingly well, very consistent performance, and that will continue in the coming quarters. Similarly, on our transmission and distribution, a very consistent transmission performance. In fact, it has been improving because every year we are adding a large number of capacity in Mumbai, and going forward, we will also take up greenfield projects. On our distribution, there has been all the 4 DISCOMs got added during the last financial year. In fact, one of them got added in the first quarter of this year. And the whole year impact will start coming now as we move forward. Fortunately, now that the COVID impact is reducing, and in the last quarter, we did have a challenge, especially in distribution, because April and May, a lot of places we could not go and do the billing and collection. That is behind us, and we are seeing very good trends in the month of July. And hopefully in future quarters, you will get to see very good results on our distribution business. Similarly, on our renewables, the EPC continues to do very well. Some challenges in executing the projects in the first quarter because of COVID second phase, but you will see large number of projects getting completed in the second and third quarter. And also the generation capacity that is getting added, and some of the plants are getting commissioned in this month. Our rooftop and EPC business again show very robust performance, very good order book, and many of them will get executed. So what I want to tell you is that we are on very solid wicket. We expect that going forward, our performance will only keep on improving.
So when you say keep on improving, Mr. Sinha, can you tell us a little bit about the margins? Because I think that was a heartening fact this quarter. The margins surprised positively, a sharp improvement from 14.3% that you saw last quarter. What is a sustainable margin range? And are you looking at any dilution in terms of the overall margins purely because in the T&D segment, you've got that Odisha DISCOM licenses business as well?
Yeah, so margins is something that apart from scale, we were looking also at margins. So our initial focus was to get scale. And for getting scale, typically in the initial period, you make certain amount of investment and the returns start coming in the subsequent quarters. So that is what we are seeing now, that in this quarter, the margins have improved. And again, some of the issues are also global issues, coal prices going up, or the cost of getting the solar panels rises. But these are again cyclic, and we have optimized many of our sourcing opportunities, and we expect that our margins will improve as we move forward, and the scale benefit we will get.
Okay. Mr. Sinha, just some more numbers. You gave us the overall outlook on the business, but some numbers will help. On generation, for instance, while you keep adding capacity on renewable side, the revenue has been declining. In the first quarter, it's down year on year, it's down quarter on quarter. Why is that happening? So on the revenue front, what's the target? And you mentioned T&D. I mean, you've got Odisha. A lot of other union territories are going to come up for bidding. So would you be interested in adding some assets here?
Yeah, so the revenue also gets impacted because some of the plants, especially the solar and the wind plants, are depending on the on the type of wind speed and the number of solar days are there. Typically, this time we had 2 cyclones which were there in the month of May, and that impacted to a large extent the generation capacity of some of the plants, and that's why you would see a lower revenue. But our EBITDA for renewable has gone up on a consolidated basis. So we do see that there is an improvement in the EBITDA, and we do expect that some of the plants which will get commissioned in the renewable, the impact of it will start coming from the subsequent quarters. We are very confident that our distribution business will do very well in the coming quarters. We are expecting the government has been talking about the delicensing of distribution business, and that's the big opportunity, because it's not just a few in union territories that we are talking about. We are talking about pan-India presence, and we are talking of 28 states and 9 union territories where we can have a footprint, and we can provide very good quality service, as we have a huge experience in distribution business, and the technology and the customer service that we provide is virtually world-class. So I think distribution will be one big area that Tata Power will be there, and they'll be there pan-India as we are in some of the other businesses.
Okay, by the way, Mr. Sinha, just hold on for a second. The market is really not in a mood to end this party anytime soon. Just look at that. The Nifty is now up almost about 60 odd points. It's the Bank Nifty that's charging ahead this morning, up almost 200 points, and now has conquered that 36,000 mark on the Bank Nifty. It's HDFC Bank. We should just get that up for you. That's really, powering from the front this morning and making sure that the Nifty stays above that 16,300 mark. But Mr. Sinha, just coming back to how you plan to improve your balance sheet, because the debt is still pretty high, and there is some talk that you're looking to pair non-core assets, like you're divesting your Zambia and Georgia assets. The Indonesian coal mines are on the block, as we know. But any kind of timeline that you can share with us, anything that will reach fruition, say by the end of this calendar year?
Well, I do expect that the Zambian and the Georgia investment will be able to divest in this financial year. And some of the other non-core investments that we have, we are looking at divesting some of those also. So we do expect there'll be a good turnaround in terms of our balance sheet also. And of course, whatever is there in our balance sheet, we are able to sustain it. Our debt equity has improved, our EV/EBITDA has improved, and we are very focused on ensuring that our balance sheet also is good, as also our P&L. So we are conscious of it, that with some of the investments start showing results in this coming year, we'll have a much better ratios on many of our metrics that we are monitoring.
Mr. Sinha, you mentioned that the EBITDA is showing growth on the renewable side of the business. Tell us a little more about the way tariffs are expected to shape up. I'm guessing most of your capacity is anyway tied up in power purchase agreements. I don't know if you're selling anything in the spot market. But what is the general trend in terms of the way tariffs are likely to move this year on renewables?
So on renewables, there have been more aberrations than the normal way. But we have been very, very cautious and careful, and some of the bids that we did last year, and we have also won in the last quarter, have been very reasonable bids. We have not gone in the sub 2 rupees or anywhere very close to 2 rupees. We are still at 240 and 250 range. And we do see an opportunity not only for pure solar or pure wind projects, but also hybrid projects. We won, in fact, a hybrid project last quarter. And our focus is to provide value-added services, whether it is RTC power or we have a peaking power requirement. And many of the hybrid solutions that we are giving now, I think will bring shape in the subsequent quarters. So the margins will be under check as far as Tata Power is concerned. We will never go and bid something where we are not comfortable with the margins and the returns that we expect. And we will grow in a very, very mature and a very, very calibrated manner.
Question, sir. Our colleague Agam wants to know, can you do 40,000 crores in revenue this year? Is that an achievable target?
Will surprise you.
Okay, we look forward to that, sir. Thank you very much on that optimistic note. We'll, of course, let you go and start your Monday. Quick look at the financials for Tata Power over the last couple of years. Let's bring up the revenue picture. It's been a pretty solid jump. FY21, companies obviously moving towards renewables in a big way. Let's pull up the EBITDA and the PAT line as well. Very, very steady through the years and through the changing course from, of course, thermal to renewables. Profit is, of course, that's the question. He's saying, I mean, he gave us that sort of entire sort of line of thought on tariffs and how they plan to go about it. But yeah, profitability has been under pressure over the last few years.
Okay, by the way, I can't say the same about the market. The market is just zooming away, led largely by the Bank Nifty, which is now up almost 300 points. And the advanced decline ratio is also very positive. So this party is not stopping anytime soon. But one stock that has been charging ahead post its numbers is Mahindra & Mahindra. We'll take a quick break on that note. On the other side, an exclusive from the management, Anish Shah, the MD and CEO of M&M, joins in for a chat.